I'm coming, Bill. No worries. Just getting the YouTube feed going. Okay. So I'm wondering how long can this market run in place? At the beginning of the week and over the weekend, in the letter I wrote, unless it can get above last week's high or below last week's low, it's just going sideways, just chopping back and forth. So now, yesterday what the markets sold off, they hit this support level. And while I pointed that out in the green room yesterday as it came down there, I was actually a little surprised that it held. I figured it would bounce since it fell the way it did down there and stabilize. But I really didn't expect it to rally, back. And now it's back to the top of the range here. So just as, Dan and I like to call it factory work, it's at the top of the range. So I figure there's going to be sellers here. And now we'll just see what the reaction is. And I wouldn't short it yet because there's no pattern to short it. It's just at the top of the range. And so far it's holding. And at the open, I'll just see what it does on a smaller time frame to see whether can it actually break out. And I'm not buying the breakout because it came from the bottom here to the top. But I would consider buying a pullback. And ultimately, the upside, well, I think at this point, since this has been tested over here and now it's again, if it clears here, I will have a long bias, even though I just looking at this. What is the last week's high there? Is that last week's high? 2840-ish. I guess so. So getting through there, it opens up the door where there's some chop here. Since it's gone sideways as much as it has, I don't think this is going to be anything of any significance to stop it from going higher. But it's got to get through this area here. So it's got to prove itself. So far, it's not even the open yet, 9:30, but we've got what we refer to as a bear sandwich, green bar, red bar, all the way back down to the bottom or close to it of the green bar, and green bar right back up again. So, but it's just within this sideways mess. So it's just continuing to run in place. And until proven otherwise, it's what I also call a commission generator or a frog in a blender pattern. And I said yesterday in the pre-market analysis, I said, this is for day trading, and nothing wrong with day trading. It's just to put in perspective that the majority of stocks are not going to provide swing trading opportunities. On a broad base, we are finding stuff that looks good, surprisingly, and that's the way this market has been. No, Dan has defined, I think, Dan, I think you're flipping here. You said that the sandwich is what's in the middle. Yeah. All right. So the meat is in the middle, and that's the red bar. So bear sandwich. And in any case, you can see it's red, green, flip-flopping back and forth. This bar is not complete by any means, since we've got the whole day of trading to go here. But you can see, look, up, down, up. It's a trading range. So at this point, it's what is it going to do here? So we're looking for information, meaning, and we could see on a 5-minute chart, we can get a little more detail to what's happening. And you see that there's this breakout run right into the top here, this consolidation and run up, and now it's stalling up at resistance. Makes total sense. Just look to the left and what's there. So now if it can chop around here, and a 30-minute high could be an entry long, because I don't know that this isn't going to collapse right back down from this point. So Well, we'll look at the other markets and see what they look like. Maybe they give us some information that this one isn't. As we look at different markets, we get clues or insights into what one market, how it might influence the other. Right? So let's go through that. Even, bonds that are, you can see down here, are supportive of the market going up, but are bonds breaking through any support? We have to take a look at that. NQ futures, same story, but poking a little further into these highs here. But overall, up, down, up, still within this range that we've got going on here. And I've got the low here down at last week's low, and the high up at last week's high. And at this point, let's see what it's going to do. Can it get through this area? And let me just back this up. So I guess last week's high is a little bit higher than that. So we'll see. Be careful here of fake breakouts, especially since it's moved here from the low up to the high. So keep that in mind. And on the smaller time, 5 minute, you've got the little run out of the base. And this isn't climactic, meaning it came out of a multiple hour consolidation. So while we've got a wide range bar on the 5 saying that this is exhausting itself in the short term, and it is at resistance, it's not a climactic kind of a pattern that we would consider as a short. So should be buyers on a pullback. We'll see after the open whether this creates an M top or whether it goes sideways and breaks out. So we'll have to see. Looking at the Dow for more clues here. Same pattern. We've got the same thing on the weekly. We use the weekly, but it's trading inside of last week's range, obviously, which we can see on the daily time frame. And so now the Dow is up at its initial resistance area, and it's got the second part up there at last week's high. So we do have some little bit of a different pictures here between the Dow, the ES, and the NQs, is that the Dow has shown some relative weakness, or that ultimate area breakout is above where it is right now. So this so far is the weaker of what we've looked at, but still at resistance. We'll see what it does. Same daily pattern. The Russell, here's the, prior high. I guess it's that bar right there with squishing this up here to get a little more data. I guess that's the prior high up there. Well, no, right here. But nonetheless, if it can get through here, we do have that void. So we do have voids aligned, but, a little bit different structure through these contracts as to what they might do. But ultimately, this is going to hit, should hit the wall up here along with everything else. So while this is maybe playing some catch up at the moment, since the others are already at resistance, when it comes up to this 1520 area, and you see it's backed off from here once. So that does kind of neutralize that a little bit since it tested it once already, and now it's coming up. Nonetheless, I'm pretty sure, just based on historical patterns, that it'll stall when it gets up there, and then we'll see what the reaction is. Oil up a little bit, but this is just a mess. It tried to hold here and it didn't, went down ultimately to where, buyers are more comfortable picking it up and just chopping back and forth here, trying to create a higher level. It's not certain as to what this is going to do at this point. So, it's just consolidating at this resistance. Looking at a pattern like this, I think the takeaway is go find something else. Stay away from it. Bonds just consolidating their amazing gain as they pushed up through here. And so while they've stalled, that's giving the equity markets a little bit of a sigh of relief that interest rates aren't continuing to plunge lower. Right? So bonds going higher, interest rates going lower, but this is not showing any significant weakness at all. It's just chopping sideways here and even above that minor support there. So unless this is going to break down below this area here, which ultimately you would want to see if equities were going to break out above that resistance and into that void above, ideally you would see bonds beginning to break lower. So that's the intermarket analysis part, even intraday, that would support equities going higher. So you can keep an eye on that. And if you don't have, the bond futures, you can just look at TLT or interest rates, TBT. So you can see that's up here a little bit, but it's just chopping around. We have no clear, strong indication that supports equities breaking out of that range from this, what interest rates are doing and bonds are doing, but maybe that'll happen. Something to keep an eye on. Gold is just consolidating. It had this whippy wild action here. So this as well is consolidating its gain. And, as we've gone over for some time now, the fact that this breakout is extremely bullish after multiple years of basing. So this price action here is just fine based on this monthly breaking out like that, which is still supportive of this going higher. But right now it's just chopping around. Silver is up at this resistance. So while it is showing relative weakness by not breaking out yet, it kind of brought up the rear and gold moved faster. And then this played catch up and it's just slopping back and forth. Again, this is a kind of a pattern to just stay away from and wait for things to tighten up, or, maybe this market, I think, is just waiting for some kind of news to really get some commitment one way or the other. Who knows if that will come, but we're looking at these other markets to see, are bonds going to poke lower, which still wouldn't violate the trend if they did. But if they were to do that, well, the S&Ps could break out above here and try and push up at that point. So transports, it's just, I don't know, a mess for a better term. It's just a mess. Overlapping bars, gaps, tails is something to stay away from. And this is a guide. We always try and add a little education to these reviews, is that when you see something like this in a smaller time frame, go to the higher, see if it makes any sense by condensing the data. And you can see this prior low here is that prior low, but it really doesn't tell you much of anything other than to just say it's at support and it's stabilizing, but nothing to be considered as an opportunity to trade because there's just too many overlapping bars and tails. And just the Russell, just looking at the ETF, kind of the same thing. Support, it's holding here. And so we're waiting to see whether these markets can really gain any real strength to break out, or whether it's just going to be another day of chopping within the range here. It's summertime. It's August, coming into the end. People are on vacation, summer doldrums. And as we get into September, things will probably start to pick up. But other than that, that's about all I have, rather than going through ETFs here. But we're not going to do that here at this time with Dan. Review our opens and some of these gappers, which I'm surprisingly, what I have here, well, it's mostly green. This is usually filled in, which suggests the activity is not that robust here this morning.
Yep, sorry about that. Yeah, sorry. Yeah, what I was saying was, here's the spiders that, we have the nice bullish gap to resistance here. And I was hoping that it didn't run like it just did the last 45 minutes, because then 30-minute high I would have been selling put spreads all over the place. That's still my bias, but because it's just getting more extended now pre-market, it's going to be a little harder to pick our entries. But I like put spreads on many things. Amazon, I was watching yesterday. I was hoping it would just calmly come in another day or so, and then we have a bullish reversal. But now we're getting a bullish reversal by gapping over yesterday's high. So right now, they closed at the 1770s, 1760s for $1.62. So that's what I'm going to keep an eye on. Spiders, I'm going to want to sell a put spread for today. Maybe the 291s right here, right at this gap fill. But back to opens on the weekly options trader. We only have 3 positions, TLT. We have a bear call credit spread, and I moved the stop to Monday's high, which will lock in a profit. Workday, we have a put spread, way out of the money. You know, here was yesterday relative weakness, but still held the stop. Finally, Home Depot was just this beautiful 15-minute hourly chart. So we sold a $2.50 wide put spread for Friday. And with Lowe's being up, and the market up, not a surprise that that's up. Oh, and I was reading in the journal today about Home Depot announcing yesterday about their, slowing lumber sales and trade tariffs and, profit warning, and look at the stock. So that's just proves to you whatever the news was, the market was expecting worse. That's what that picture tells you. Swing and options trader, Aqua. We bought a continuation breakout there. Beautiful weekly. C block, we're long stock. And if it trades under yesterday's low, we'll leg into a covered call. But now I like the gap up, so we should be fine. CNC, we have a bear call credit spread. Nice. Closed at the dead low and is a very weak bounce. That came from McGraw. Very nice on the call spread. Campbell Soup, we're long stock. Cress, long stock over this 55 resistance on the pre-market. So, I mean, on Monday, we entered yesterday over 55 bucks. Dish has been a dog here, but we're just going to play it out. It was a climactic. EDU, we did a bull put credit spread yesterday, and it's having a gap up. That looks good. Echo Whiskey, we are long stock. Actually, we legged into a covered call yesterday. Let me change the code on the spreadsheet. MLM, we have a put spread. Ruby, long stock, and that's gapping up, looks great. SJM, long stock. He's on probation. That breakout should not have been 100% reversed. SRC, we're long stock with a stop under this big bottoming tail bar. Twitter, we're long stock. Actually, we legged into a covered call yesterday, and it's gapping up. WDC, covered call. Finally, ZTS, long stock. And it looks like it's just flat, which is relative weakness. Roku, it's sloppy, but 30-minute high, maybe put spread for Friday. ADS, this is what we call a bull gap surprise. Far from the 20, multiple red bars. Now it's gapping over yesterday's high. That looks great. I'm going to put that in this window. SC had earnings, and it's, I can't tell, but I don't like the way it trades. You're gone. Royal Bank of Canada, it's a mess, you're going. Jack Henry, 138.80. This is actually a Condor candidate. We got major support, we have major resistance, gapping down a little bit. That's a beautiful Condor. Let's see how it settles down. Toll had earnings, 35.50. It's a mess. Lazy Boy, 31 and change. It's a mess. You're gone. Urban, it's a mess. It's still in a downtrend. ADI 109, bearish gap, but there's nothing to do. We'll come back to it. Maybe some type of credit spread. Cree 56 bucks down here. So that's a beautiful bearish gap. So I have it in the bottom right here window. And notice that with the market rallying the past hour, this is not. This is a beautiful call spread and day trade short setup. That looks great. X, I just had, here's maybe a 1, 2, 3 for a put spread. Look, beautiful move here, pre-market 2 days ago. Late day breakout setup, another day of consolidation, which gives us that inside bar. Pace C, gapping up, 250. Yeah, McGraw, you were asking me about this, and I said sure over yesterday's high. Now we don't buy after multiple up bars. So see how this one rallied 3 days to resistance and a red bar. We wait for it to go sideways, we wait for it to pull back, or we wait for some type of event to tell us that it's ready to make another run. Yesterday's bar did exactly that. Why? It gapped down, sold off, recovered, closing, engulfing to an all-time high. Beautiful weekly, monthly's extended, but that's not a core trade, it's a swing. So that is the reason why it's good to go over the high. So I like that, McGraw. Futures coming in here a little bit now, which is good because we're not going to be chasing. TJX had a blowout. No, that's, I'm sorry, I'm confusing that with a different one. So 52 bucks, that's a mess. LOW 110. Wow. Wow, look at the weekly. It's gapping all the way over 1, 2, 3, 4, 5, 6, 7 weeks of trading. It's a bullish gap, but nothing to do with it here. It's too big. PLCE did get whacked this morning down to 66 bucks. Now it's at 72. It's still a bearish gap. If we can get a bearish setup intraday, that could be a day trade short and maybe a call spread. PDD 2940. That's a, here's my weekly, so it's gapping way the heck up here. After multiple up bars, then you're having a big old gap. That's typically a short-term top. So this will be a candidate to sell a call spread on, because with earnings, the volatility is going to be high. So you get high volatility both in extreme greed and fear. So this, and earnings, of course. But the fact that people are euphoric about it, those calls should be juicy. So I'm going to put that in a little window. I'll put them right here. JMIA 1190, bearish gap. But it's, you know, they could set up some type of W bottom. I don't know. GRNC, this one also, if it can trade above the week's high, but maybe even sooner. So I like that. CBM also, it's chopping around here at the prior highs. If it can chop around more than a breakout. A Dollar General we had on our list from Monday because of this big old bottoming tail, and now it's a gap breakout. We'll watch that on a pullback. Oh, the Vinda, there's my 1, 2, 3 I was telling you about. On Monday, I said if this sets up as a 1, 2, 3, then it'll be beautiful. So you can buy that over Monday's high, but it's a biotech, so warning on that. CRWD over yesterday's high to all-time highs. FLT, it says it's gapping up 260, but there's no volume. That's, you know, strong all time frames. That looks great. There's our aqua. These are messy. Beyond from yesterday, we were looking at a put spread, but it wasn't worth the risk. And that's all I got. IPHI. There's better. McGraw, it has to get over this red bar's high. There's better. Same with team. You know, maybe over Friday's high, it would be okay. All right, look at Cree in this window here.